I've been trading crude oil for 5 years, and my channel has always been about using indicators. And I had an epiphany about 2 weeks ago where I've decided to stop using indicators. I actually found that they were causing me a lot more problems with my trading. So now I only trade a bare chart. Really, that is all I trade now, and I just use horizontal lines. And this is one concept of using horizontal lines. I do have a background though, and that is just to help me with the where I am in the world as far as time goes. The blue is the Asia, green is the UK, and the grey and pink is the USA session. This strategy, if you follow me, I like to try and make 20 cents per trade. I'm really happy if I can make 20 cents a day in crude oil on a couple of contracts. I'll never have to work a day job again. Simple as that. I'm also going to warn you that trading is risky and that you can potentially lose everything. Okay? These are just concepts and ideas that I'm putting out there, and I do not suggest that you trade these without severely backtesting hundreds of days of trading to make sure that you certainly know exactly what you're getting yourself into. I will not be held accountable for any losses that you incur with trading. Let's get into it. I don't use indicators at all. All I do is I just use a line. However, this, I don't call it an indicator, but I suppose it is. But it's just a bunch of horizontal lines, which makes my life easier rather than me having to put down 20 friggin' lines every day. This is called multi-horizontal lines, and it's put together by this person, Super Ursek, Super Ursarek, I don't know. Anyway, there it is. It's quite a good little indicator. It only goes back 100 bars, so that's a little bit annoying. I'm going to try and see if I can make one that goes back 1,000 bars. As I've said before, I try to make 20 cents per trade. This is a 1 hour chart of crude oil. And these lines in between, like from one line to another, is worth 20 cents. Okay? If I do this, it's worth 20 cents. Up and down. And what I like to do with this strategy is I like to find the first bar of the start of the next trading day. So this is Friday. That's the very first bar that printed. And what I like to do is mark the open. Where did it open? And it opened here at 65.25. If you look to the right hand side, 65.25. So this indicator, I'll open it up and I'll just mark here 65.25. There's a white line. You'll see it move. It'll go up under this bar. There it is. Okay. This is all there is to this particular indicator. I hate using that. You can't change anything other than just that. Okay. So let's just say, for argument's sake, if price is above this white line, we go long. If price is below, we go short. Simple as that. Okay. There's many other ways to do this. You could trade both long and short if you want to. Okay. Just for this tutorial, let's just say we're going to go long. And how does it work? And I'm going to warn you, there's going to be quite a lot of losses, but or break-evens, both, and then you will have good winners. Okay, providing the market is providing the good winners. This is crude oil, and the last week has been astonishingly bad. Okay, but we can still carve out an existence with this. The whole idea is when price crosses a line upwards, we enter a trade. You can see right here the wick crossed up, so you take the trade. Trading's just luck. At the end of the day, we don't know what it's going to do. We don't know if it's going to go up or down. We have no idea. It's once you put your order in, it's up to the market. It's not up to us. There's nothing more we can do. So we enter this trade here. It goes up and it closes on us. Okay, so we may have broke even. We may have had a small loss. It's a bit hard on this one because it happened so quickly. You probably would have had a loss. Okay. The next bar opened on the line. That means we go long. It came up. It didn't quite. I did get to 20 cents. I would have. I don't know if I could have put my stop in there. But had it gone to 20 cents, I would have put a stop in at 21 cents. And then if the thing goes, at least I've made 20 cents. It just would have happened too quickly there. So we've had a loss, we've had a good win, and we are now in front. You can see this next bar opened, went up, came back. I just would have got out. You know, if I see it coming back, if I see it coming back on me so quickly, just get out. This is where it's going to get you. These little wicks here. This one went up, came back, loss, came up, loss, up, got out. So you would have had maybe a couple of small wins and a couple of losses. This is the Asia session, and you shouldn't be trading the Asia session anyway, but I've just got it up. Now we come into the UK. This is where we're going to see more action here, and you can see the bars start to get bigger. So what did I say? When it crosses, you take it upwards. We made 20 cents. The next bar's opened. It opened here, came down, crossed up, went up to 28. I would have put my stop in at 20 and then let the thing go. Okay. Here this bar went up, came back. Excuse me, we had a loss. Nothing here. Where are we? So this bar opened here, it crossed the line, went up. I would have had my stop in at 20, and this bar I would have been watching it go up, and I would have how can I do this? I would have put my stop in at 21 cents, and if it had kept going up, I just would have trailed the stop, just keep pushing it up, okay? Nothing here. This one here is obviously a good trade. Bar opened. Remember, this is 1 hour bars. Bar opened, went all the way up to 36 and then came back down. So you might have had your stop in at 22 or something. So you still made 22 cents. So this is why the UK and the USA session is far better than the Asia. The Asia just don't trade it. This here, so what actually happened? Let's have a look, see if I can work this out. It opened here, then went up and came back on us. You still would have had a win. Same with this. You're trading the wicks. Look at that, you made 20 cents on that wick. I mean, that's pretty cool. Now we get to, the price has come back down here. It's crossed this, it's crossed our open bar. See how we put the line here at the open of the day? It's crossed that, it's gone down, so that's an entry. It's taken us all the way down here to 48. You certainly would have at least got 40 out of that. The bar, it sucked back up and then it opened again. Now price actually went up because of this wick, so we take that and we probably made 5 cents. That's cool, man. Price opened here and then it crossed back up through the white line. We take that and there we go, and look, we just keep going. This opened right in the center, it didn't cross, and of course here we would have taken a short, and that's the end of the day. So lots of winners in here, couple of losers, but you would have come out in front. If you're just after 20 cents a day, you certainly would have come out in front. Go and back test this. The issue with this horizontal lines, it only goes back 100 bars, which is about a week's worth of 1 hour data. I'm going to see if I can make one that will go back like 1,000. So you could, or at least, yeah. Look, at least 500 days. I must be able to get in there and put the code in and go back 1,000 days. So, and as you can see, that was a very weak oil trading week. It was just the bars were. It was just. It's really bad. We just had this massive short of $14, and then the market's just sitting here doing nothing because of all the stuff in the world that's going on. Anyway, go have a practice of that. It's a good, fun strategy, and one that you should be able to carve something out of every day. You know, as I say, the markets, it's just luck. Trading is only luck. Once you put your order in, it's out of your control. Okay? Good luck.